Live from the Carl Chevrolet Studios in West Des Moines, this is Iowa Live.
Welcome back to the program, everybody. We do have Cam McCarty here. He's the president of Vivid Tax and Wealth Advisors. Great to see you, sir.
Yeah, you too.
Perfect timing for you to be here today. Just looking at, what time it is. It is tax time, and there are some things that you still need to think about if you have not filed already, and that's what you're here for today.
Absolutely. And the first one is, I hope people didn't miss it, and that was due on April 1st. So, talk to your preparer on this, is required minimum distributions.
Oh, okay.
So April 1st was that deadline. Now, there are things you can do on the back end, especially with waivers or whatever. But
explain what that is for people that might not understand.
Sure, yep. So a required minimum distribution. So depending on how old you are, whether you're, there's a law that was passed. I'm not going to get too deep in it, but for example, if you're 73 and you have these IRAs, the IRS says it's time to start paying tax on these accounts. And if you missed it, they're very nice to you. It's only a 25% penalty.
Oh my God, really?
Yeah.
Wow.
I'm not even kidding. That's why it's important that you talk to professionals so you don't miss these things.
All right, so keep that in mind. Hopefully you took advantage of that. And if you missed it, there are some things that Cam can tell you about too if you get a hold of them. But what about contributions? You mentioned IRAs. What about contributions?
Yep, so you mentioned it. April 15th is the deadline for tax season unless you filed an extension. But like, for example, traditional IRAs, you can make those deductions or make those contributions, and it helps lower your taxable income.
Okay.
That's nice. You can also do it for HSAs. That's triple tax-free.
Right.
So you can do that as well.
Now, if you file an extension, does that give you more time to put money in them, or not? Or it has to be by the 15th?
It has to be by the 15th.
Okay, so that's an important thing to remember here.
Great. That's a great question. Okay. So don't miss that either.
Okay. And now talk about the SALT deductions too. Explain what that is. Explain what SALT is.
Okay, so SALT is state and local income tax. Okay. So in the past, it was $10,000. This is property taxes.
Okay.
Okay. With the bill that was passed last year, they increased it to $40,000. So that's a huge increase, but it's income related.
Okay.
So again, I can't just do a blanket across the board.
Okay. So what kind of thresholds do we have here?
It can be up there, especially for these states that are high taxes.
Okay.
Up to $500,000.
Okay.
So that's a pretty big deal. But if you have property taxes that are up there, that's going to help.
Okay, so there's some things to keep in mind too. And then there's also something that we want to talk about if you're 65 or older.
Right.
There is something that you said is new, so pay attention if you're 65 or older.
Yep.
Because this is really, it sounds weird, but exciting for people that are 65 and
absolutely.
older.
I wish I had it, right?
Yeah.
Last year, they passed the big, beautiful bill.
Okay.
And so with that, there was these tax deductions on tips, overtime, and they talk about Social Security. But what it actually means is for Americans that are 65 and older, they get a $6,000 above the line on top of the standard.
Okay.
So if you're married, you're getting $12,000 on top of the standard deduction. So you're writing off over $40,000+.
Wow, I never heard of that before.
That's a huge deal, especially for people that work jobs where they get tips.
Right.
You can get up to $25,000 tax-free if you would in terms of tips. There's a lot of cool things out there.
And the tip thing, that is really something that we want to touch on that real quick, too, because that, again, may have flown under the radar in some areas.
Absolutely.
Yeah.
So for people that receive these tips, and we have some clients that do, and they file their taxes, up to $25,000, that's the caveat there.
The threshold?
That's the threshold of what you can write off. Now, there's also on overtime as well, too. So just make sure you don't miss these things. I mean, this is all brand new that was passed last year. Talk to a professional or a coach to make sure you don't miss any of these.
Okay, now something else we want to make sure that you don't miss out on is if you have a vehicle.
Yes.
Okay, let's talk about the vehicle benefits that are
Okay, so a lot of people think it's any vehicle.
Yeah.
That's not how this works, okay? So it has to come off a U.S. assembly line, and it doesn't have to be a U.S.-made vehicle. It could be a BMW or a Toyota or whatever, as long as it finishes off the assembly line here in the United States.
Okay.
You can
so
write
built here.
Built here in the United States, off the assembly line. You can write off up to $10,000 of interest income or interest that you paid for that vehicle loan.
Okay. So a lot of things to keep in mind. And you learn a lot of these things on your TV show, which is outstanding. It's on over the weekends here on Local 5. Tell everybody what the name of your program is.
Yep, it's Retire Vivid. I mean, it's a great name.
Yeah.
Right? You can also go to our website at retirevivid.com to learn more about who we are and what we do, but we are here to help.
All right, now if you want to get more information about everything that is going on, you mentioned Retire Vivid.
Yeah.
I'm guessing that's exactly what this is here, right?
That's what this is. I mean, we are a tax and financial firm, and so, you know, it's walking through all these phases people need to think about.
Perfect. RetireVivid.com is where you need to go to get all the information. Great job, as always, Cam.
Appreciate it.
Thank you for watching, everybody.